Well, look, it's something we've been positive on at ASR for over 2 years now, almost 3 years actually, since the invasion of Ukraine. And it's a theme we've been running for that period of time. And it's basically the view that, Europe is just going to have to spend some more on defence in this new world order. And I think in reality, events over the weekend at Munich, as we were just hearing from that report, have just brought it home about how this is very immediate. This isn't an issue for the next 6 months, 12 months, 18 months. This is an issue for now. So I think it's a theme that's live, it's a powerful theme, and it's super important for Europe. And this is why we're seeing this move in markets today.
What do you think of European markets more broadly? They've actually performed really well. We've got 8 straight weeks of gains for the Stoxx 600, despite what is still a really difficult macroeconomic picture. Why has Europe outperformed? And do you think that we're going to continue to see strength in the European market?
Yeah, you're right. It's had a very good start to the year. And if you look at last year and the year before, and in fact take the charts back to sort of 10, 15 years, of course, it's been almost a perennial underperformer, particularly relative to the US. And I think a few things have happened here. I mean, there are some relatively attractive valuations, and there are some kind of stock-specific themes going on within Europe. But actually, for us, the macro backdrop is still superior in the US. We think this year is all about earnings. We think we've already had the multiple expansion in equity. So now it's, can companies deliver these profits? And we think the US corporate sector is in a much better position to do that than Europe. So we're just neutral on European equities with a preference for the US as it stands. But you're right, it's had a nice bounce back on, what's some pretty cheap valuations across the sectors.
Well, I want to get to your preference for the US in just a second, but sticking with Europe, within Europe, we've seen a really strong performance from the DAX. It's trading at an all-time record now. What has driven the gains in the German market? Is it a story about fundamentals, domestic fundamentals, or is something bigger at play? Is it a political play? What's the story?
Yeah, so look, I think there's a few things going on here. I mean, it's certainly disconnected from the underlying macro data we look at, the PMI data, the economy, the corporate profits, those fundamentals. It's moved away from that, and I think there's a few reasons for that. I mean, certainly at a stock level, you have had some specific stocks. You mentioned Rheinmetall there, it's outperformed NVIDIA over the last couple of years, so that's been an incredible stock. I know, exactly. You've also got SAP in there, you've got some other tech themes, you've had Siemens Energy, so they've had some sort of AI themes and defense themes at a stock specific level. And then I think you're right, as we look forward to Sunday and this very important German election, there's some hopes that maybe whatever administration comes in next could relax the debt brake, could relax some of the fiscal policy, and could enable some stimulus for Europe, which of course is what the US has been doing very aggressively in the last couple of years. So that, and I think we should combine that theme with defence, right? Because that could be one of the ways that Europe decides to actually spend some more money or needs to spend more money, and that could be how we get around some of these rules and regulations.